Hey there. Welcome to the South Florida Mortgage Report. It's Billy May, your hat dude wearing mortgage guy, along with Craig A. Garcia, our Capital Partners Mortgage President. Craig, good afternoon.
Good afternoon, sir. Welcome to the midweek edition. Quick update. We've had two topics we wanted to talk about. So what are those topics, Bill?
Well, we're not going to talk about mortgage rates like we usually do. We'll save that for the Friday podcast. But really, today we're going to talk about two big things in the news. Well, the 50-year mortgage. The president says, hey, let's have a 50-year mortgage. And also Fannie Mae, the second topic, has come out and said, hey, you don't need a 620 credit score to get a conventional loan now. So we're going to kind of delve into that and tell you about what does that really mean.
Yeah. So let's dive right in. So let's talk about FICO scores first.
Yeah,
So
the boring stuff.
yeah. Well, so big news. It sounds great, right? Hey, so
Right.
no longer do you have a minimum 620 FICO score to get a Fannie Mae loan? That basically said, hey, you don't need a 620 score to get a Fannie Mae loan anymore. Hey, great. More people should be able to get Fannie Mae loans. Does that
Right.
sound right, Bill?
Yeah, I mean, in theory, it sounds like, oh, better. It's just great. The mortgage world is opening up. But I mean, you and I both know you can have a 589 credit score and do an FHA loan with more favorable terms than you could on a conventional loan, anyways, right?
Well, that's true. But I mean, even before we go there, I mean, this idea that, hey, just because we're going to eliminate this minimum score doesn't mean that now, if you've got a 610 credit score, you're going to be able to get a Fannie Mae conventional loan,
That's true.
because we have a 620 minimum credit score place right now, but just because you have a 620 credit score, even if your DTI is in line, doesn't mean you're going to just get approved,
Right.
right?
Yeah. And if you are going to get approved, it's usually very, very unfavorable terms because conventional financing, as opposed to FHA loans. Or conventional has what's called private mortgage insurance, which is that goes out to the private market, and they've got to charge you private mortgage insurance rates. And if you have a 620 credit score with 5% down, that monthly mortgage insurance factor is not very favorable.
Yeah, no, and that's a great point, Bill. I think the big thing is that people will see this headline, and I think that that's kind of what it is. It's really a headline grabbing thing that says, hey, we're doing something to make things more affordable. We're going to eliminate this minimum credit score requirement. When in fact, I'm not so sure how many more borrowers it's really going to help. Because the first point was you could have a 660 credit score, but you're trying to buy, a property and put 5% down and your credit's okay, right? You don't have a lot of money in the bank. Just because you have a 660 credit score, that doesn't even mean you're going to get approved. You know what I mean?
Right.
And even if you did get approved, to your point, it might not even be the best option for you. But um, but but the point remains is it doesn't mean that a lot more people are going to be able to get Fannie Mae loans now just because this minimum credit score requirement is eliminated. You're still Fannie Mae. It looks at the whole picture of your scenario. In other words, it's looking at a snapshot of how much money do you make, how much money you have in the bank, how much money you're gonna have left over after closing, what's your credit history like, and it's that the pieces of that puzzle, how it fits together, determines whether you're going to get approved or not. So could somebody with less than a 620 credit score, or the average of two borrowers being less than 620 now, get approved where they were not going to get approved before? I think it could happen, sure. I do think that picture, the rest of the picture, because obviously if you have less than a 620 credit score, that's not good credit. I mean,
Right.
that's definitely below average.
Yes.
And so the rest of your pieces of your puzzle need to be pretty strong. Your
Yeah.
your DTI is probably going to need to be low. Your LTV, so you got to be probably putting more down. So maybe it's still going to help some people, get in because that minimum credit score barrier has been eliminated. But
Yeah.
I would say most people still there's the rest of the picture is probably not going to compensate for the lower credit score. You know what
No,
I mean?
absolutely. Out of 100 people, it might help, 10 out of 100, I think, really. I mean, this could be valuable for somebody that maybe they've got a significant chunk of a down payment, 20%, 25% that, and they had some negative credit last year, and that's why they have a 595 credit score. And maybe it's better than FHA because FHA has mortgage insurance that's still not cancelable. You can't cancel mortgage insurance on FHA loan. So it might appeal to some people like that. I just think for the majority of people, it's really not going to be a better fit. But like you said, it's kind of a bang in the news, and it kind of makes some noise along with our second topic, along with the 50-year mortgage. It looks like, well, hey, the administration is doing something. They're saying, hey, conventional financing, you don't need a 620 credit score. Hey, let's do a 50-year mortgage. And I think what you're, like you said, it's trying to provide something out there to give people hope that, hey, there's something being done with housing, because really at the end of the day, it's very difficult in today's world. And let's segue into the 50-year mortgage, Craig. I mean, really, does it
Yeah,
make a difference?
well, let's before I start, let me just say that, hey,
Sure.
it's good that that people in charge are aware there's affordability issues. Obviously, how could they not be aware? But that they're trying to do something about it and they're thinking differently. Hey, I'll give you some credit for those aspects of it. Yeah, I think the minimum credit score thing, it's going to be more headline than it is going to help a lot more people get some stuff
Right.
done.
Right.
Um, the 50-year mortgage, this is interesting too. And it is along the same lines. Hey, we know there's an affordability issue. Let's think outside the box. What can we do? There's a bit of a challenge. I mean, and this is not the first time that this type of thing has come up. So I was thinking that, it's crazy to think about how long ago this was now, but in the late 90s, like 2000, interest rates were in the eights.
Right.
The dot-com boom was happening. The
Uh-huh.
stock market was going crazy. Rates were high. And they were trying to figure out ways to make things more affordable, and there was a big push for 40-year mortgages.
Yeah.
And
I remember
so
the 40-year mortgage. Sure, of course.
they were right on the rate sheets. So we would get the
That's
rate
right.
sheets, like, we would have our 30 years, our 15 years, and then there was this new option of a 40-year loan. And we were
Uh-huh.
like excited to have something to talk to people about. And the challenge was that, and let me just, in terms of mortgage terms, right? 15, 30, 40, 50. Usually the way it works is the shorter period you're borrowing the money, the less interest that the investor, the person who's putting their money into this bond that ends up becoming the money that you borrow,
Right.
they'll accept a lesser rate. The longer you want to tie up that money for them, the longer you want to borrow the money, usually the rate is higher. And so, just to kind of take a step back and go, okay, so like on a 15-year loan, right? So a 15-year loan, let's say the rate on a 15-year loan today is 5.75.
Right.
If you're borrowing $500,000, that's a payment of about 4150 a month. Okay. So that's a 15-year loan at 5.75. If you flip it to a 30-year, right? The 30-year, you're doubling the length of time. The rate goes up. So maybe that's, instead of 5.75, maybe it's 6.25, right? Just
Right.
to put a number on it. So 6.25 now, but so the rate is going up by half, but because the term has been stretched out, doubled, the payment goes down to $3,078. It's $1,074 a month lower in payment for the 30-year loan versus the 15-year loan. And that's why a lot of people don't get a 15-year loan,
Oh, they
because there's
don't.
a
I mean,
huge.
come on. When's the last time we did a 15-year mortgage? I haven't done one in forever. The last time I did one, I think, was a refinance, or somebody owed maybe $200,000. They went from a 23 years up to 15-year. I get that. 99.9% of people cannot do a 15-year. All the loans today are 30-year. We know that. But really, from 30 to 40, I mean, what's the difference there in 50?
So this is what happened back in the late 90s, 2000. So they came out with this 40-year loan, and the additional add on to the rate was about 0.25%. So if I look at that today, that same $500,000 loan, instead of being 6.25, if it's 6.5, then that would be a payment of 29.27. Okay? So it's actually $150 less. And what happened back then when they rolled that out was people would look at the numbers and they'd go, man, I'm saving $150 a month in my
Right.
example, but I'm adding 10 years onto my loan.
Right.
Wasn't that exciting.
No. No.
So even though they had done all of the, getting the whole plumbing set up in the mortgage industry to accept a whole new loan term, it takes a bit of work, right?
Yeah.
Especially on a large scale. It had kind of been done. And so, but people were not choosing the 40-year loan. It just didn't
Yeah.
sell. And it had been talked about some other times, but that was the time that I remember that it got pushed the most. It was like a regular thing on the rate sheet, but it just didn't catch on. It just didn't.
Yeah.
So now a 50-year loan, right? So a 50-year loan, I'm assuming, and it was funny, you forwarded me an article, and an analyst from UBS had basically the same. I'm assuming that, when we went from a 30 to a 40, it was a 0.25% add on to the rate. I'm assuming if you go from a 40 to a 50, be another quarter percent add on to the rate. So in our example today, a $500,000 loan, now on a 50-year loan, you'd be looking at 6.75, so 6.75. That would be a payment of 29.13. So you're talking about from the 30-year loan to the 50-year loan,
Right.
it would be $164 a month in savings, right?
That's
For
nothing.
20 more years.
Right.
You know what I mean?
That's what I'm saying. It doesn't make sense. It
Yeah.
really doesn't. That's why I think, like you said, it's a news grabber. It's a headline. It just doesn't make any sense. It's the sizzle, not the steak. And I'm going to segue to this. In my opinion, if you want to do something that's going to help borrowers now, how about giving some better aggressive pricing on 5-year or 7-year fixed rate ARMs? You know what I mean? It's something that works because the average person is in the home for what, 8 years, 9 years. Let's give them a nice fixed mid range ARM that's affordable. That's a half a point cheaper than a 30-year fixed. Why can't we get that product? And to me, that makes more sense because, most people are going to move or sell or whatever. I don't know. That's just my opinion. The
Yeah,
50-year
I mean,
thing, it sounds great, but it's not practical. That's in my opinion.
If in my opinion, hey, if we couldn't sell the 40-year loan because it
Right.
wasn't enough of a savings for people to add on, to go, this going to the 50 just doesn't seem to add the juice. Yeah, and yeah, the UBS analyst, they assume the same difference between the 30 and a 50, probably be a half a
Right.
percent difference in the rate. And that would, there's just not the difference from going from a 15 to a 30 is monstrous the way the numbers work out for people.
Oh,
But the
no.
difference in going from a 30 to a 50, it's just not there. You know what I mean? So
Yeah.
so yeah, I'd be curious to see if there's some other twist to this that they come out with. Obviously it's just kind of a conversation right now, and something that's out there in the headlines. But I wouldn't be thinking, hey, oh, there's some new program that's coming that's going to save me a bunch of money as a perspective. Maybe borrower, maybe a refinancing opportunity that you're looking into. I don't think there's going to be a 50-year loan that comes and that's going to change the whole game of what you're looking at, and versus the options that are available today.
There,
I
there,
hope I'm wrong, but
There's no I think unfortunately there's no silver bullet. There's a number of factors of reason this happens. Home builders, I've talked to the home builders. It's very expensive to build a single family home. That's why they build these mega, luxury rental apartments in these cities. They don't even want to sell them as condos because the builders want their money quicker than usual. Unfortunately, the cities are enticed by these builders. Hey, let's just make it a luxury apartment. There's so many factors involved. There's not enough inventory out there. There's really no quick fix, as sad as that is. And for young people today, it's tough. It's very, very tough. And I don't know what the answer is, but I don't know. Like you said, the 50. I mean, I think in England or Japan, were they talking like a 100-year mortgage or something in Japan years ago? I don't know if it ever came to fruition or anything, but basically,
honestly,
you're like a renter. You're paying. You're not going to build any equity, right? I don't.
yeah, I mean, there's a different conversation to get in later, that we could get into in a different episode about the benefits of prepaying the loan and paying it off faster versus longer. There's a whole conversation around that, but yeah, listen, maybe they'll keep trying to come up with a way to reinvent the wheel. Maybe they'll figure something out that makes sense, that helps with affordability. And we'll just have to wait
Maybe
and
in
see.
Florida we get rid of property tax.
Hey, DeSantis is trying.
Maybe in
So
Florida we get rid of property tax. That would be very enticeful to people relocating to South Florida, or not even relocating for people buying a primary home in South Florida. That would make it definitely more affordable.
yeah, that would definitely be impactful.
Yeah,
So anyway, quick update on those
sure.
two kind of in the headlines things that people are asking about. We've had a lot of questions about it already, so we thought we'd just get on and talk a little bit about that. But anyway, we'll be together again here pretty soon on Friday, and
Yes.
we'll see the rest of you.
And special guest. We have a special guest this Friday, right? Yeah.
Right. Okay. Well, we will see you. We'll see you later this week, or we'll see you at the.
The closing table.
There you go. There you go. All right. Thanks, Phil.
See you Friday, Craig.
See you.